All right, all you devils, how you doing out there? Sam here with you. It's Friday the 22nd. So, of course, we're going to take a look at Bitcoin. Now, before we do, just a couple of housekeeping things here real quick. First, I guess just a reminder that if you're going to be home, kind of locked in for the weekend or maybe not quite as active as you might be under more normal circumstances and you want to, you've got some time on your hands, you're thinking about maybe doing a little work on your trading skills, or I just remind you, you can always come over here. You can join us for free. That'll get you access to the Discord, well, sections of the Discord, but it will get you access to our white belt course, which I happen to tee up here the syllabus. So again, this is, while we are making this freely available to you, this is not lightweight material. If you're coming up the learning curve as a trader, this will challenge you. All right, now I'm not going to go through all this, but of course you could pause the video if you wanted to kind of look through this a little bit more. But this is just shy of 4 hours of content, 16 chapters. There's a lot of meat to this, and this is, I've had people, as I've mentioned this before, come in and they say, all right, I'll just rip through the white belt, no piece of cake. I mean, I've got people that are not new to the markets failing this on a fairly regular basis. It's not something that you can just blow your way through and pass without putting some effort into it. And of course, we do that deliberately. We don't want it to be easy. This is not a throwaway course. There's good content in here for you. And again, I remind you, as I've said before, this is not purely an Elliott Wave course. While there is a section here where we're introducing Elliott Wave because we think it offers value, some of this stuff in here is quite good. The supply and demand pieces, the volume pieces, it's way more than just an Elliott Wave course, which I think some people confuse that. This will challenge you. So I just kind of mention that as an option for you. Again, that's entirely free. And of course, we do that because we think if you like the content and the teaching style, you'll consider perhaps pursuing a higher belt. Right? And they get progressively harder, of course, as you might imagine. Now, the other thing, just before I get off of this, for the weekend, we'll do a little Memorial Day promo here. We're only going to do 10 of these, and we're making these available only to new members. So existing members, sorry guys, we got to do this for the people that are on the outside that would like to come in. So we're going to offer a 15% off on social and educational. You could get the discount code. Well, I'll tell it to you here. It would be Memorial for the Memorial Day weekend holiday, right? But all lowercase, Memorial, right? That's one way to do it. If you're not sure, if you just want to double check, if you want to talk to us first, you could just send us a DM via Twitter, say, hey, I'm kind of interested, maybe have a few questions, etc. But just so you know, that's 15% off on either social or educational. And then, of course, you can always join us for free here. Okay, with all of that said, let's go over to get an update here on Bitcoin. Now, I've modified the count here just a little bit based on the price action that we've seen over the last few days. I think this is a count that works and it kind of accommodates what we've just gone through here. But just for a quick, I'm on an 8-hour here on Binance, just kind of a big picture review of where we are. We were here last week, bumped right into this golden zone, and that's where we are finding resistance, which should surprise exactly 0 people. Hang on, let me turn that. Oh, that's my Ninja Trader. Hang on a second. That will trigger as signals are being fired off here. So this clearly, and this is about a $400 range, so we'll call it, well, rounding. It's roughly 10 to 4.5, right? So you've got about a $400 golden zone here that is, I'd like to think at this point we know what's happening there. So not that we can't get through it, but this is going to be a challenge. So the market's going to have to really motor through this. Now, the way the count has revealed itself here, I think this actually is going to play better because we are now teed up per the count, which we'll go through here, for a potential third wave, which is just the kind of impulsive move you will need to get through this because this is very stiff resistance. One, it's psychological, right? 10K is psychologically going to be resistance. I mean, we can see just the price structure here. What happened? Again, you can keep it simple. What happened the last time we got here, right? So to get through this and not have that repeat itself, right? We're going to need this. This is going to need to be a pretty good move here, right? And it's going to need to see volume and all the things that you would anticipate going with that because this is going to be stiff to get through this. Right? And of course, the more times we hit our heads up here, the more vulnerable we are to this. All of a sudden, we start coming down, right? And it starts to get ugly. No reason to assume that yet. But we got to be mindful of this move right now. Of course, I've got this nice, this is actually a regression channel, just going from the low to the last pivot high I have here, which seems to be framing the market just beautifully here. So we go down to a 3 hour. And I'll just go over this count here that I've updated it a bit. So here I've changed this. This was always an alternate. Some members will recognize this, that we had listed this as an alternate here. Given the depth of this retracement here and the fact that we double top in here, I think we can trade this as a leading diagonal. It's just barely, not quite a double. Well, shit, you call it a double top, right? They're within a few ticks of each other. But I do think you can work a diagonal in here. We do get a very slight overlap of the proposed wave 1, which is clearly a 3. So we'd have to trade it as a diagonal, and then the depth of the retracement here is a bit of a tell. And now, of course, the first assumption is that this pivot is going to hold, which there's no guarantee that it will. But it is technical, so I would like to assume here, I'm going to take this side off, so we know, well, I've got the white line there, so we know clearly where our resistance is. Excuse me, guys. Okay, so here's the modification. So I do still think the 1-2, the first 1-2 is still very much in play, and all of this is part of the subdivision along the way to deal with that first 1-2. But then coming off of that 1-2, right? Here's the change from the count as it was last week. I do still think we get our 1 here. This, oh shit. No, that's not a diagonal. So we get an impulsive 1 into a 2. Then I get yet again a 1, a 2. Now here's the adjustment. It does appear like you could trade this. This has always been a possible, is that we've completed the 3 here. Now so it's 1, 2, 1, 2, 3, 4, 5 to complete the 3. Now part of what's guiding me here is the fib relationships, right? So you've heard me say there are no random pivots, but we want to use these swing relationships to help identify not what we know is the count, but what are more probable locations for these waves and these numbers to be terminating in the context of their relationship within the entire trend. And that's a mouthful to say, so it's easier to show it to you. So if I start from my proposed wave 2 here, because at this point, I'm trying to determine what I've got here. If this is 1, 2, and I've got my 3 in, now the 4 is in, right? I want to qualify this internal impulse to see how solid it is, how technical is it per the wave relationships that we would be anticipating. Well, let's break it down. Let's use our APP. That's what I call it. I'm not sure what it is. TradingView calls it the trend-based fib extension. I don't know where the hell they got that, but I've always called it the APP, the alternate price projection tool. So I'm going to use the APP from my proposed low of the first wave 1. So wave 1 pivot high to the wave 2, or pardon me, to the second wave low. All right, so do you see where that puts my wave 3? So in this context, it's 1, 2. Here's the highest probability zone for a wave 3, right here. So the 3 landing here, again, while this count is open to interpretation, it could be counted different ways, guys. I understand that. Not everybody's going to agree with this count or have the same count. What I'm using is that statistical knowledge that I have here to say, okay, well, while that may not end up being the count, as it relates here, there's a pretty good probability that I've got my wave 3. Not only do I tag the 1618, 175 window here, look at the reaction off of that. So technically, that's fairly solid. So you go, okay, well that's a good start on it, right? I can see the contender here for the wave 3. Well, how about the internals? Well, oops. Let's get you off of here. All right, so if that's a good 1, 2, 3 here, well, how about the 1, 2, 3, 4, 5 that's in here? Well, let's just check it. So again, this is the proposed start of the wave 1. Here's the wave 1. Here's the wave 2. All right, so here, it's not quite, get right. Fuck, hang on. Let's redo it. Get right on that low and right on that high. All right. And I got to pull this over. Okay, there we go. So here's the wave 3, the proposed adjustment here. So you've had to go 1, 2, 3, 4, extension in the 5, right? So here's the, That's what I want here. Here's my 1618, 175 window. Yeah, we got to wick through it. But still, in terms of the 1, 2, 3, given the drop for the 4, I'm comfortable planning the internal wave 3 there as relates to this 1, 2. All right, so good. All right, so now we look, okay, well, how about the 4 to the 5? Where the most common relationship, if I'm looking at a completed impulse, length of the 1 projected from the low of the 4 is the 100. We're within a couple of ticks. So do you see the confluence that's happening up here? So via the internal impulse with the wave 5 tagging that at the same time that the lower degree, or I should say the higher degree, pardon me, the higher degree is tagging the 1618 there. Do you see that confluence? And then what follows. So part of it is, oh, okay, well, that's kind of interesting. Look at all that confluence. It's what follows. Then now you get pretty solid putting that 3 there and that 5 there. All of the technical confluence, this is all just Elliott Wave 101 fib relationships, which, by the way, right over here, wave relationships in that white belt course, right? So if you want to, get more clarity on how I'm doing this and why I know that that's a high probability location for that, come on over here, tune it up. You'll be able to do this yourself. Okay, so that said, I'm feeling pretty good about this 3 here. So now, given the depth of the drop off here, now this is just a free fall, so there's not a lot of subdivision, so you're a little screwed there. But you got to work with what the market gives you. So if we're allowing for this count, right? Well, of course, note just the beautiful. Here, let me just show you what I did here. This is all I'm doing is just using the regression tool. I'm going from the low and I'm going all the way to this proposed wave 1 high, right? It just does it automatically. So it's taking the mean, right, the median line, and then it's 2 standard deviations on either side. So note here to push a little bit beyond, retraces back in. Now here, look, this is just unbelievable, right? So as we come, again, this is drawn from this low. So all of this is not a function of my connecting anything other than the low to the swing high. It's the 2 standard deviations on the edge, right, that are catching this, right? Nothing random in the markets ever. So here we go. So from the proposed, here's the wave 4. So you're thinking, oh, okay, well, perhaps we're going up, we're going to go get our wave 5, right? So you're thinking, okay, here it's the 4, now we're going up for the 5, but we bump our heads here at 10K again, and we fall down pretty hard. So the process of elimination, you have a couple of choices here. Either you're going to truncate the 5, of this 3, you're going to go 4, and you're going to truncate the 5. Possible, right? Of course. Nothing says that couldn't be the case. And if that were the case, then we're just getting started now. If this is a completed 5, then we're getting started on the correction. Well, I think that while that's a possibility, we want to avoid a truncation unless the market absolutely forces you to do it. So if this just starts to really free fall down here, well, that's all we're going to be left with. But until I'm forced to do that, I want to avoid that. So what's the alternate? Well, the alternate would be that this is the 4, albeit it's very abrupt. Right? No question about it, and we don't get great alternation here, but you're kind of working backwards. Okay, so if this is completed an impulse to give me my 3 here, well, right. I suppose there's a case that could be made that this could be A. We're going to have a wicked Elliott shuffle to get that to be a B. You could be doing something like that. I suppose that's a possibility. That said, recognizing that okay, maybe you've got to, again, do some hideous force fit here to get that to play. It's possible. It's possible. But avoiding that, can I get something here that works that wouldn't require me accommodating all sorts of rule breaks or, let's truncate it and this doesn't quite work and that's definitely not a 3, but maybe we can, fit it somehow, shoehorn our way into a B there. I just don't think you want to do that, again, unless the market forces you to. So that all being said, let me go down to an hourly and we can look at this, and there's a reasonable case here. Now, this is a cluster. You kind of got the same problem here. Either you're going to truncate the 5 here, or you're going to live with an ABC into a 1 and go, okay, well, I suppose it could be a diagonal. Well, if it's going to be a diagonal, I better get an overlap of that proposed wave 1, and sure enough, I get it. So I've got a contender here for a diagonal into a 1 wave. Is it pretty? No, it's terrible. But could it work? Could it be the count? Well, of course, we've got a very deep 2, but right, it's internal, stays internal. We've got the 4, if I'm thinking about a diagonal, yeah, I've got this on the other one. Hang on. If I'm thinking about a diagonal, let's go. Just get our measured move. I want to look for a relationship between the start of the 1 and the pivot of the 3. Well, I come right here. Well, this is what gives me my little overlap. Look how the Vegas wave. Oh, just pretty. All right, so catches it here. We're between the 38 and the 50. We don't get too far below the 38. We get just far enough. You know, you could call this the structure. Accommodating it here was the high volume node. And then we get one last little kick up here. So if it's a diagonal, yeah, you're going to have to ABC it, and then ABC that as well to give you a 3, 3, 3, 3, 3. To give that diagonal a 1, and you have to go ABC. Well, take note of where we landed here. All right, so let me back into it this way. If this is a completed 1 wave and we're anticipating the 2, where's the highest probability location for a wave 2? All right, and what's something that we know that Bitcoin is incredibly responsive? That's got to be 100, 200 golden zones I've shown you on Bitcoin. At least that many. We don't. I'd like to think, well, certainly members have all done this, but if you're watching on YouTube, I'd like to think I didn't need to do that. You've already done that, right? You know Bitcoin is very responsive here at the golden zone. So what do? We go through this, oh shit, sky's falling. Oh my God, where's it going? Where would you anticipate it would be going? Now, maybe you're a bear and you're thinking, oh, fuck it, there it is, failed 5, down we go. Well, at least where would you anticipate some support showing up? Well, if you're not a believer of the golden zone, and amazingly there are some of those, well, here's your high volume node right there. Where would you anticipate that you'd likely find some support? You know, that's not rocket science, guys. That's not complicated. The golden zone is just it's the precision of that. I'd like to think we're past the point here that we don't have to wonder what's happening there. All right, so we know what's happening there. An algo kicks in, and thus we get the reaction. Now, again, it doesn't mean it can't break, but it's leading us in the count. So what else now do I have here? All right, I've got a 5 followed by, well, you know, you can back ass your way into that. So an A, B, C to give me I've got a 2. I've got a contender for a 2. Well, if I'm at a 618 from a swing low, of course, you know the next thing we're going to do here. What do I have? Right? I've got a potential golden corner pocket. Boom. Now that starts to look pretty interesting. So we know, right, per Andrew's work, and again, I always emphasize this, I know, but I have to do this, right, for people that maybe haven't seen this before, they're new viewers, but as long as this pivot holds, 80% probability of making the median line. Now, nothing says that this can't break. As long as it holds. Now, we could hit it here, we could hit it here, right? You don't know when. Now, that's awfully, looks like it, I mean, literally like you're lining up the sights of a rifle. I mean, that would be, and that would be the, well, that pivot, right? So you look at that and you go, huh, what's that pivot from? We got to go all the way back to that pivot high right there before it went down. Right, that was part of what we used to frame up the market here in terms of the quadrants. So that being, you know, kind of just laid down right there looks awfully promising. All right, so let's open this up again. All right, so look at the confluence we get here. So we get, this is just, you gotta love this, right? You either love it or you hate it. If you don't apply it, you probably hate it because you don't understand what's going on. Let's get these tightened up, I should say. Okay, so here we go. So here's the channel coming up here. Here's the point of control, meaning the highest amount of trading happened right at that level. Golden zone. Right? The confluence of factors that are right there, that's a reason. So think about the risk reward there. Even if you're using the 707, which often I'll use for a stop, the potential risk reward is so favorable there. This is not a hard trade to take. It's just not, right? So even just using the first algo target, if we put let me put the 707 on there. Oh, give me a second. Where have I got it? There we go. There's the 707. All right, so 707, square root of 50. So I'm going to go just a tick underneath that, just a little bit. Just give it a little breathing room. Remember, this could break. It could go to the 707. You still have a corner pocket. You just no longer have a golden corner, right? We like the golden. Why do we like the golden? Because look at the risk reward. That's why I'm always looking for a golden, because I can just, whether I want to use the other side of the 65 or the 707, the risk reward is so good. That's 6.3 to 1. And that's assuming, right? That's assuming that this count is inaccurate and that all we're going to get here is the first algo target. And we're not going to get a 3 here, which would put it up here. Now you're talking 12 to 1. If indeed the count plays out and that's the 3, 1, 2, 3 into that golden corner, well, shit, maybe you're getting it up here. You do get a time component, or that's why median lines are leading indicators. So if this is going to go up here and get up to that, to get a, what would that be, guys, right? We just went over this, right? APP, right? What would that be? If I put it right there, right? 1618175, right? So have we seen that Bitcoin has a tendency to respond at the 1618 or the 618 golden zone? So if you're a bull, right, you may or may not be, right? Well, we're past the point where my position, right? I'm a raging bull. I think that we're just getting started here. So this looking to go up here to get to, well, let's call it 11.8. Right, for the 1, 2, 3. Remember, that's what we need. This line here, this is part of the break of the 65. Right, so this is, I think that actually does it here. That breaks the 65 from the last dominant high. So for us to go up and break all of that, we're going to need an impulsive 3 here. So teeing up the setup here. So right, we don't know that it's going to go there. Right? It's probably likely not going to go straight. But this, right, we know an algorithm bought it here. That's their first target. Right, I don't know that that's, so what you'd be anticipating, maybe you got up to something like this and that becomes the 1, 2, right, or 3, 4, something along those lines, right? But this is a first target where and again, we know that that's resistance because remember that pivot, right, that we tied that to, so there's going to be a reaction there. So you could anticipate that's a reasonable first target. So maybe you don't take all of it off there. Maybe you just take 60, 70% of it off, wait for the retrace, reload, because you're after this target up here at 11.8. Okay, let's pull this off. Okay, so I don't, let's see. What else do I have here? Let's go to a 3-hour here. I had a few other things I wanted to show you this before I move off to a daily chart where I do have a little bit of a lesson to show you. So if this is 1, 2, and we're going to get up to that 3, 4, and 5, let's go back. Let me go to an 8-hour here. All right, so this would be a pretty decent roadmap here. I'm going to take this internal off here just so we can kind of get a better look at this. Okay, so again, we have a very technical pivot here. Again, all the confluence here, point of control, high volume node, the upsloping channel, golden zone. I mean, I can't stack them anymore for you here. We're above the Vegas wave. Just a huge confluence of technical events here. And now, again, nothing guarantees that doesn't break and we aren't down here at 6,000 over the weekend. There is no guarantee in trading. What you have here is a very low risk, high reward trade that is setting up. Well, shit, I mean, you could buy it right now. Because here I'm on an 8-hour. Right? This could be just the first lead. You went down to a 30-minute. You catch a little 1, 2, right? We're just getting started in the 3, 4, 5, the 1 of the 3. So you can trade this right now. Look what else it's kind of framing over here. Right? Look at that. All right, so this little nug over here, the kind of, we kind of keyed off of both of these, this one and this one. Well, look how now we're framing this here. This little stall before we dropped, right? And then we went to the next one. We stalled before we dropped, right? Well, so look at the two of them, right? Do you think these might have some influence in the market? Right, look at them. Exact same thing, same concept. Now you go up to the high, right? It's the same kind of thing happening over here, right? Just a little cluster. All right, coming over, right? Is that what we hit our head on? Well, of course, we know it's also a golden zone. So you got plenty of this. I mean, Bitcoin is not easy to trade, but it's awfully technical. It's very technical, right? It's all algorithms. Okay, so here we go. All right, let's get all of this off. Okay, so I think at this point, this is kind of a do or die. Now we could go deeper here. But you for this count to really realize here, you want this low to be in at that golden zone. So if we start to weaken and head lower, well, right, so it doesn't kill the bull count, but you'd prefer certainly here if this count is going to realize, right? Nothing says that it must, but if it's going to, you would not want to see these lows challenged again, because you could do this as well. You could kind of look down here and say, well, I had this giant wick and this big area down here, and this seemed to be the structural support that held it. Now it's also a 50 from below here. We looked at that. Oh, from this pivot, right? So we're right to a 50 here. You'd like to see that hold, right? That's gonna, now you're gonna start to feel better about all of the count that's preceded this. If this goes and we get a third here, and again, I'm not expecting that by tomorrow, but if we ultimately get our third here, right, for that 1618, then all of this starts to solidify. Right now, it's still kind of could be, or I'm not sure. But again, you're never 100% sure. There are accounts where the probability it's blatant, but there are no guaranteed trades. Right? If you're looking for one, stop looking. Right? There's no guaranteed method, no guaranteed trade, no guaranteed setup. It's a stupid waste of time. Don't waste your time looking for that. No such thing. But all we get is probabilities and risk reward. So the risk reward here is very attractive. Just throw back and put that in your ear. It's up to you. You got to pull the trigger. Not me. And you got to manage the risk, and you got to make sure that you're not over trading for your account size. Those are the things. I can't do those for you. Right? That's up to you, the individual. But you can certainly see the rationale here for a very low risk, potentially high reward trade to be sitting right there. Right? So we just kind of have to watch this here, knowing, well, okay. See, if you're a bull, you wanted this. Yeah, and I know, right? So you're in it and it's going and you're like, come on. And it rolls over and you're like, wah, wah. But you actually, that's not, you want it to come down. You want the depth of retracement so that it can recycle. You need this. So one, you clear out the weak longs who are like just there, oh, maybe the breakout traders. Those are weak longs. They panic, they sell, they get stopped out. That's what drives this down. You need that little clearing, just a little flush at the trash, right? And then you need that so now people who know that let me say it this way, that one approach to trading is to wait for retracements. When they retrace and find stability at technical levels, then we want a buyer. Then we want to be a buyer. The other approach is to wait for a breakout. Well, see, this is what retail does. They go, well, we talked about this last week. Okay, is it safe? Can I buy up here? Oh, it looks like it's going to break out of that high. Can I buy that? Well, there are times, yes, where that will trigger. There are times where it's more that a breakout trading is more profitable in equities. It lends itself to equities much more so than futures, FX, or crypto. In those three asset classes, you want to play retracements, right? So think about it here, right? So if you're buying the breakout here, where's your stop? Where's your stop? Right. So then you got to make the choice of, oh, okay, well, I'm going to use the last pivot low. Okay, well then, I mean, compare the two, right? So now your stop is the last pivot low. Compared to, I'm a buyer here at the golden zone where I'm using the 707, I've got this tiny little amount. Here's the difference of risk. And since this is a game of money management, not puzzle finding, solving the puzzle, that's the fun part. The trading, the business of trading is money management. So just looking at the two in terms of who's got better risk reward, I mean, that's a rhetorical question, obviously, right? So clearly the breakout trader, so the only other choice the breakout trader can say is, well, I'm going to randomly say, okay, I'm only going to risk 2% of my account. Okay, well, that has nothing to do with the market. That's you trading your wallet, not the market. So just this is not complicated, guys. Money management. That's the name of the game. This stuff, right? All this stuff, man, that's the fun. That's solving the puzzle, right? You either love it or you hate it, right? If you hate Elliott Wave, you don't love the puzzle. Shit, I'll tell you that if you don't like it, it's because you're lazy. Because this will help you. There's some people go, fuck, it's what a pain in the ass. I got to remember all these rules. I get that, right? And I'm not saying you have to have Elliott Wave to be successful. It's just another set of tools, but it's useful. There are times when you can't, there's no count there, you don't know. So it's not like it has to be present in every trading decision you make. But at times, it's very useful. To not invest a little bit of energy into learning it and understanding how it can work for you. Lazy traders. Okay, so all of that said, let's do this. I think we're clear here that this is a very tradable event as we sit right here with the golden corner and everything else we just went through. So you've got a trade sitting there. You can buy it right now, right? We know where the stop is. I'd suggest the 707. So don't lever up so that you're going to get liquidated. Be smart about it, and we're not swinging for the fence. This is not a trade to buy for new all-time highs. Be smart about it. What am I doing? Oh shit, 30 minutes. Okay, all right. Let me. I'll leave you with a teachable moment. Okay, so let me get some blank space over here. So here's this. Let's do it this way. Where's my tool here? All right. So most of the time when we're talking about retracements, we're always talking about an internal retracement. Now, if we start talking about an external retracement, it's always in the context of a new high. Well, here being a bullish case. So if we're thinking, oh, I've got an internal retracement. So between this line and this line here, if this is retracing, I've got an internal retracement, right? So we talk about it all the time. This is right. We know this is what algorithms do. We know this, right? We don't have to wonder. This is how algorithms work. Now, this is not the only algorithm in the market, right? So we know that they all leave footprints. There's a couple of things you can know. There are no random pivots in the market ever. They're always tied to something. If you can't find it, you haven't looked hard enough. It's always tied to something. It may not be to the tick, but it's going to be very close. No random pivots. You could save yourself a shitload of time and just take my word for it. Or you can go through and do exactly what I had to do because I wasn't going to take anyone's word for it. So I have proved over 25 years, I have proven it over and over and over again to myself. There are no random pivots. Everything is tied to something. Everything is technical. Somehow, some way, if you can't find it, keep looking. It's always there. Now, I digress. Back to my point. Okay, so this is the algorithm we know, we track. It leaves footprints. We know what it's trying to do. Right? Again, not the only algorithm on the board. Well, so when we talk about going external, we're talking about going beyond the pivot high. Oh, external. We're going external. We've taken out the initial swing here. We're going external. In this case, we're going higher. Well, wait a minute. What do you call this? If I break the low here, that's also an external retracement. We've gone external to the initial swings, right? It's just we're going the opposite direction. So what do you do with that? Does that have any meaning? Can we use that in any way? Well, let me get these off of here. All right, I probably should put this in I save this for members, but here I'm already into it, so I'll keep going. Okay, so let's go back to our swing here. So we've got this, but now it's going to keep going, and I've got external going the other direction. So you can look at you can see a couple of. Well, here's a great example. Okay, so. All right, so if we go from here, we swing. Now this is coming down. You're anticipating, oh, we're going to hold here, an internal retracement. We're going to go up. I'm going to get my, my measured move, A to B equals B to C, something along those lines. Or we're going to get the algo swing with something along those lines. Well, hey, what happens when it breaks the low? What is that? What do I do with that? Could that be technical? Well, there's a lot of ways to deal with that, but they are all right as probably not surprise you. I'm telling you that these will be related to algorithms and to fib numbers. So here, let's draw it up. So I call them doubles because we're going beyond the 100. So here's the doubles ATM. Now this is the kind of stuff that we teach you all of this in the belt system here. So, but if we're going external to the low, right? We're again in my examples, the anticipation is you'd be breaking the high. Well, if you break the low, now let's get it over here. Right, so we do the same thing. So coming down. So the first one is the 127. Oh, pardon me. The 1236. then the 1382, then the 1414, right? Then the 1618, 200, 2618. Okay, so the 1414 is the square root of 2, right? It's considered one of the sacred roots, right, along with the 707. So this is something you want to pay attention to. You tend to see it more when you're going this direction, when you're getting a negative, if you will, if you're going beyond the low that you were starting with. So again, back to this example here, right? When we've gone past 0, right, we often see this range, right, these being hit, and all the way down to the 2618. And you go, okay, well, that sounds interesting. How do I use that? Well, here's just a couple of examples for you. This is the kind of thing when you're like, what the hell happened there? Right? If you can't find it on traditional alternate price projections in the traditional fashion, and you can't find it on a retracement, and you can't, or perhaps you looked at the range expansion, you still can't find it, and you're like, God damn it, I can't find it. What is it? Okay, often it'll be the external retracement going the other direction. So let me give you an example here. So this is the first one that you have to use. So do you see what's happening here? It's going up. You're anticipating the retracement coming down because you're thinking that's what's coming. Well, when it breaks the low, we get a new technical pivot down here, but it's an external retracement, but it's going the opposite direction. So let me just draw it up here so I can get right on these pivots. Let's get right on them. Okay, so now take a look. All right, so here's the swing. Here's the low we break. Once we break that, now here's the 1382, 141. Here's the 1618 within a couple of ticks. Here's the 2618 to the tick. And that's off of the first swing all the way down. Now, would you have ridden it all the way down? Shit, probably not, right? Because there's multiples here. But when you're wondering, God damn it, why does it stop there? This is the next place to go look, right? If you've been through the other three, you can't find it. And what is it? Boom, that's to the tick, guys. So you go, okay, well, that's cool, right? I don't know that I would have stayed with all of that. I'd probably taken profit here at the 1618 because I know that's more common. You wouldn't have the foresight to know here. But you see, it's happening multiple times here. So let's look at it here. So here's the next one. So if I go from this low to this pivot, right? I get right on it. Well, look what I get here. You see this? Boom. Right now you go, okay, well, maybe that's just coincidental off of the first one, but not the second one. Not the second one. Okay, you're like, okay, well, that's very fancy, right? Big fucking deal. Okay, let's keep going, right? Let's see if we can use that again. Well, here's the most obvious one. Right, swing up again. Right, you're here. You're long. I know because I was here going. Holy shit! Look at that. Oh my God, that's a perfect impulse. Down we go. Now I'm looking for that. Doesn't happen. So, what else could it be? Let's grab the low to the high. I get it right on it. Boom. Okay, so let's put that all together. Right, you see, guys. You see what's happening here? Okay, let's get it right on that low. Let's get it right on that low. Okay, that's 3 of them. Not 2, it's 3. All leading to that pivot. 1, 2, 3. All of the 3 big retracements that go external, the opposite direction, all 3 of them point to the exact same, which that's within, oh geez, $3-4. Amazing, right? There are no random pivots. It's always tied to something. If you haven't found it, you just haven't looked yet, or you don't know how to look. You don't know what to look for. Want to learn it? Come on over here. All right? Want to really go deep? 15% off, right? Discount code on the checkout is Memorial. Right, here's the current trade. Here's the kind of shit we'll teach you. Okay, guys, there you go. Have a great weekend. Happy Memorial Day. I guess we're back on Monday. All right, we'll be back. Okay, back to you guys. Have a good one.